my name is Bogdan, and today I will tell you about one mini strategy on the cryptocurrency market, how you can trade very effectively and open large profitable positions. So, the first element of this strategy is the usual classic structure with the removal of inducement. What is it? How is it formed? I think you know. If not, then look in the video channel about the structure of the market or just about IDM. The point is that the price must remove the inducement and move further along the trend. I think you have often met such a situation that the price moves in one direction. This is the first thing you should consider. The second is the trading of ranges, that is when the price trades your effective range, namely it's 0.5. That is, if it trades 0.5, then everything is okay. If it does not do this, then in the future this maximum will be weak. Here the question of the fractality of the market is solved, because this maximum will be an inducement of the older time frame. If, for example, it is 0.15, then there will be IDM. And the third is, if we talk about crypto, about the trading strategy for crypto, which works as effectively as possible, this is the opening of a new day. The point is that, for example, every new day opens in New York. At the moment, it is UTC 0.5. This is in New York. Again, this is winter. If it is summer, then there will be UTC 4 as far as I know. And accordingly, this is the opening of a new day. That is the opening of every subsequent day on the cryptocurrency market. And how does it work? For example, you have a downward movement, the price removes IDM, and at this moment a new day opens. For example, you will have time 0.0 in New York, and the price begins to move up. That is, at the beginning of the day, the price moves up, thereby inciting people to open positions in the purchase. But we consider this as manipulation, and during the day, of course, we expect that the price will still go down. That is, we initially have manipulation and a clean exit during the day. The same thing works in the opposite direction. For example, if the price at the beginning of the day simply went down, then accordingly during the day it will have to go up. But this is correct. You need to be able to use it in context. And it is with this structure, if you find all the factors together, if they coincide, then you will be able to make a really perfect deal. And it will be as big as possible and as profitable as possible. Soon we will move on to examples and how to use it all in context. For example, the price removes IDM, trades 0.5 range. After the opening of the day, the price moves up and creates a reversal situation on the same time frame on which you analyzed. I advise you to use M5 time frame. If you trade crypto, then this time frame is M5. M15 does not make much sense because it will be too long. And above M15, accordingly too, M5 is the most optimal and ideal option. In this case, the price removes IDM in the opposite direction. You can wait for additional confirmation in the form of an update of the trade. And here you can go on sale for this minimum. Such a model will always work everywhere and you can use it. Here I had positions on Bitcoin for sale. In principle, they worked out as well as possible. I opened them in my Telegram channel, by the way. I will delete this Telegram channel. Let's continue. This is Bitcoin timeframe M5. What do we see here, friends? The fact that the price removed the inducement here, confirmed this minimum here. Then it went down, made a boss, and confirmed this high. By the way, it also made a deviation over the middle sliding EMA line. We see the confirmation of the new minimum here. Why is it here? Because here it went up and removed the inducement, that is, it prompted people to buy here, but it really went up because it removed the AXM in the opposite direction. Thus, it prompted people to sell, but it still went up and traded at 0.5. That is the average value of the range relative to this maximum and this minimum. It traded at 0.5. What do we see? We also had the opening of the new day. In general, it is preferable to market on the time frame watch because it will be more understandable. There will be a lot of unnecessary movements on M5, but in principle, this is not particularly important. We see that the new day opens at 0.00. On December 18th, a new day opened. It was the 18th and the 17th opened. And we see that the price went up. Accordingly, this is all manipulation. And we see that during the day, the price moved down. And here we had a setup reversal. It removes the inducement and moves on to the downward side. We see a break, a removal of the inducement, a removal of the inducement here, a local break, and a removal of the XM. That is, there are a lot of fractal moments, and the opening of positions 1.5 and 1.4. In general, of course, it was possible to pull them lower to the main goals. In our strategy, positions are worked out in this way. I did not have a desire to wait so long, although in principle it came very impulsively, but I closed more locally. It turned out like this. This is a very simple strategy. You must work it out on the backtest and work it out on the real trade. In the future, I will shoot videos about the context in more detail to use this strategy much more effectively. Also about bytes and price involvement. This is also a very important point. Thank you all very much for watching. Like, subscribe to the channel, subscribe to the Telegram channel so as not to miss anything interesting. All links will be in the description and in the closed comment. Thank you all and bye.